Hey everyone, welcome back to Nadlin Forum Podcast Daily. It's Ruby here, and as always, I'm joined by Lyor. So, we've got a big one today. September's NAHB Housing Market Index came out, and, well, we're kind of stuck at a 32 again. That's 17 months where builder confidence just won't budge above 50. Lyor, is it just me? Or does that sound a bit like deja vu from the last, forever?
You are spot on, Ruby. It's like Groundhog Day for the market. The HMI staying at 32 is basically telling us that builders are still feeling the pinch. Challenging conditions aren't going away. We've talked about this before, but when the HMI is under 50, it's basically saying most builders see things as unfavorable.
Yeah, and yet, here's the weird part. The report did sneak in a bit of good news. Expectations for future sales, they actually hit a 6-month high. It's like things are rough, but maybe not as rough in 6 months. I mean, what do you reckon is really driving this stubbornly low confidence, Lyor? Is it just interest rates, or are there gremlins in the plumbing?
Gremlins. I like that. Honestly, a lot of it is the cocktail of high borrowing costs, slow sales, and prices that just won't bend. So affordability stays a big issue. And then, in Israel, we had these moments too. I remember a period, this is maybe 5-6 years ago, confidence among builders flatlined. Even when we saw a few little positive signs. People were hopeful, but the fundamentals just weren't there. Everyone's waiting for that one big change, right?
Exactly. And I guess it shows that hope for lower mortgage rates isn't a strategy. It's more like a wish list. So we'll see if that optimism for the next 6 months turns into something real. Yeah? Let's talk about the why behind all this. The mortgage rates have just been, on this weird bungee jump lately. Like 1 minute rates drop and everyone thinks, all right, it's finally going to get easier. And then boom, they spike right back up. Kind of reminds me of hunting for my last apartment in Sydney. Rates literally changed overnight, and I swear my real estate agent went grey on the call.
I totally get that. It's happening here too. Buyers and even the builders are just stuck in this holding pattern. Every small move in rates sets off a wave of calls. Should I buy now? Should I wait? In our episode on the mortgage application surge, we saw that lower rates had everyone scrambling. But this back and forth, it freezes people, makes planning nearly impossible for everyone.
Yeah, and I mean, when rates do drop, there's always that question. Does it last long enough for anyone to actually move on it? Or do we get another spike before buyers or builders can react? Do you think there's a chance we see some relief for builders with rates going forward? Or is affordability just kind of the challenge for all of 2025?
If I had a crystal ball, I'd be a billionaire, right? Realistically, though, unless there's a sustained drop in rates, affordability problems are just going to keep slamming the brakes on the market. Every time buyers think it's safe to come out, the cost of borrowing gets them again. I think, like we saw with the Saving the American Dream Act episode, it's not just rates, it's the whole system. Wages, material costs, and government policy all roll together.
That's a good point. People keep staring at the interest rates like they're the only meter that matters, but so much else is tangled up in this mess. I might be wrong about this, but I think even with lower rates, if prices and costs stay high, it's just not enough, right?
No, you're not wrong. Until those big picture affordability problems get untangled, the roller coaster is going to keep running. Okay,
so what are builders actually doing about all of this? I read that in September, 36% of builders cut their prices by an average of 5%. And then 64% threw in extra incentives, like free upgrades, closing cost help, all that kind of stuff. Not usual, right?
Definitely not. These numbers are way above the norm. Builders are fighting hard to get buyers in the door. If you think about it, that kind of discounting and those incentives eat into their margins. But it's the only way to stay competitive, especially in the tougher markets.
Yeah, and nowhere's tougher than the West Coast, apparently. California, Washington, they've got even less builder confidence than the rest of the country, mainly because affordability's just shot through the roof. But then you look at builders in the South or Midwest and the vibe seems steadier. Not easy, but definitely not as bleak.
Exactly. The regional difference is huge. In the West, especially places like LA and Seattle, land costs, regulations, and crazy high prices put so much pressure on both sides of the market. But down south or in the Midwest, things move a little easier. Lower prices, friendlier policies, and local economies that can still support new buyers.
Makes you wonder, are there regional tricks that could help out in the hardest hit markets? Or is it one of those things where national policy really has to step in, like with that interagency task force we talked about a few episodes ago? Some local fixes might be working, but I don't know if it's enough for places like California.
Right, it's a mix. Local creativity helps for sure. But without bigger moves at the national level, these regional gaps are just going to widen. Each state is almost playing a different game, and it's all being held together by the hope that someday soon, rates and costs will finally come back down to earth.
All right, we'll have to leave it there for today. Plenty to chew on, and rate changes are always just around the corner. Thanks for listening to NADLN Forum Podcast Daily. Lior, always a pleasure. Talk to you soon.
Always, Ruby. Looking forward to next time. Thanks everyone for tuning in.